guess it's letting me record now. Oh, well, we got a lot of people coming. Am I recording? Yes. Let's see. Ethan, Quinn, Rosalind. Okay, Grace. All right, let's get rolling. I always say, let's see, we'll go around the horn. All right, so there's no particular order, just what you're showing up on my screen. So Kate will start with you. You're on mute. Yep.
I got C for the first one.
Right. Let's see. Which will find non-advantage, favorable tax, and why? You're correct. Why is that?
Because they're getting double taxed once on their income, and then the other time is on their on the stocks.
Well, when they make distributions to the shareholders, what do they call those?
It's like the shareholders are getting taxed as well.
Yeah, when they get a dividend, when we distribute profits to the shareholders, we call it dividend. Those dividends get taxed also. Rate. Let's see. Well, actually, these are easy. Kate, you do another one. Do 57. We'll do two apiece here.
For 57, I got D, managers who use accounting information to plan, organize, and run a business.
Right, because I think the other, yeah, that's correct. I think the others would be considered like external users. Rachel, what about 58?
For 58, I got A.
Yeah, because you're talking about the Internal Revenue Service, which the best answer is A on that. Someone could say that that's a D, but I think you're right. The best answer. How about 76, Rachel?
76, I got A.
Right, that's an accounts payable. Meg, how about 101?
I got C.
Plus net income. Yes, that's the form of the statement of retained earnings. And if someone has questions on these, slow me down. But I don't want to go. I want to keep moving because I want to put people to sleep. 102. What do you have there, Meg?
I got B.
That's true. Amounts paid out as dividends are not expenses. They recorded on what statement, Meg?
Is it income?
No, you have expenses on that statement. So it's statement of changes in retained earnings. All right. Let's see here. Who's next up there? Emma, 119.
I got B.
B, let me look at it. Revenues and expenses. Beginning retained earnings. Yeah, so 500. Yeah, that's correct. So how'd you get B? You're correct. How'd you get it?
I started with the retained earnings, and then I added the net income, which is the revenues minus the expenses, which is the 500,000 minus the 3,000 or 380,000, and then I also subtracted the dividends of 40,000.
Right, that's correct. That's how you got it. Yeah. And then how about 121?
I got C.
See, let me see this. Yeah, and that's just the revenues minus the expenses, 740 minus the 640. Dividends or common stock don't come into play. What else is down there? Chris, how about 122?
I got B.
Let's see, 120. Let's see. We issued stock, 120,000. Company reported revenues
I'm not positive on it though.
Yeah, let's see. Yeah, I don't think that's a B, right? So what you probably did is the revenues minus the expenses minus the dividends, because no, I wouldn't do that either. So
I
revenues.
just got my numbers mixed up.
Okay, so what do you think it is then?
It's not B.
How do you calculate net income? What's the net income is what minus what?
Net income is revenues minus expenses.
Okay, what numbers do we show for revenues and expenses?
We got 1.1 million for revenues and 960K for expenses, which would leave us with 140. So
All
C,
right, so that makes it, yep, you're right, C.
boom.
Let's see. Stay with you, Chris, on 132. Here's a little trickier one.
All right. Would it be? I don't know this one.
Rosalie, did you do this one? Rosalie?
For 132, I think it's B.
B, let's see. I don't think it's B. How did you get B?
I divided current assets divided by current liabilities.
$50,000. It's what are the current assets?
I can't really hear. It's cutting off.
All right, so fortunately I've got two computers on here, so the other ones, for whatever reason, the other ones having internet connections. Okay. Back. All right, can you hear me now? I don't know what's going on with my other computer. That's all right. I'm ready for all eventualities. Hold on a second. Wait a second, hold on. All right, so Rosaline, so if I pay $350,000, does that reduce my current assets? Oh, hang on, I got this on mute. Hold on a second. You might be answering and I can't hear you. Let me do it again. I muted
you
this
hear
so it didn't interfere with my other computer. All right, now try it. Go ahead. If I pay $350, does that reduce my current assets, Rosaline?
Does it? I think yes.
Yeah, because it's cash and cash is current asset. Does it decrease my current liabilities?
No.
No. If I'm paying what is accounts payable? Where does that go?
Liabilities.
Is it current? Is it generally current or non-current?
Or is it? I'm sorry, I'm like confused.
Okay. So I think in this case, if I pay $350,000, I'd debit accounts payable and credit cash. So I'd reduce both my current assets and my current liabilities by $350,000. And so that would give me 1,450,000 divided by 400. So that's probably that 3.6 to 1. You see that?
Yeah.
Let's see. That's a little tricky, but I think we had something like that on an earlier test. So the key there is to know the journal entries. How about 147, Rosaline?
Is it C?
Yes. Let's see, who's next? Where did everyone's picture go? This is why I like to have two computers. Hold on a second here. Hold on. All right. So that's we think okay, all right, so. Ethan.
Yes.
Yeah, hang on. Mike selecting? Yeah, hold on a second. Hold on a second.
I can't hear you.
All right, I'm back. Hold on. Yeah. Bear with me. Sorry about technical difficulties. All right, Ethan, 181.
For 181, I got D.
That is true. That is correct. Let's see. Ethan, what do you think about 195? What A? Let's start with A. Yeah.
I had some struggles with this one, so I wouldn't mind
All right.
working it out.
So who knows what's the definition of working capital?
Isn't it current assets minus current liabilities?
Right. So which are the current assets listed above?
Is it total current liabilities and let's see, what's the other one? Is it accounts receivable?
Oh, am I still recording? I'm probably not recording anymore. Hang on, I gotta start to record again. No, I'm recording on this computer. Well, what is cash a current asset?
Yes.
Is accounts receivable a current asset?
Yes.
Is inventory a current asset?
Yes.
Are other current assets current assets?
I don't think so.
Even though they say current assets?
Sorry. Other current assets. Yeah. Other current assets. Yes. Sorry.
All right, so those are all your current assets. So you'd add all those up, whatever that adds up to. 39, 43, 5, 50.7 maybe. minus, absent my
Total
math,
current
so it's all that
liabilities.
minus 24.8. Yeah,
I had 50.7 minus 24.8, which gives you 25.9.
right. And they tried to throw you a curveball with putting the current liabilities at the beginning of the year, but that doesn't matter. When you're trying to calculate current working capital now. And then how do you calculate current ratio, Ethan?
It's current assets divided by current liabilities.
Right, so that's 50.7 divided by 24.8, whatever that happens to be.
2.04
Right.
to 1.
Let's see. Let's see who else is here. We lose some people. Did we lose Quinn? Are you gone? Okay. Chris Pimentel, you going? Meg, you going?
I'm here.
Oh, you are? Okay. Hang on a second. Oh, I see ya. Yeah, hang on a second. Okay, we lost a few. We hardly knew you. All right, well, Meg, let's do then, let's do 203. Oh,
What were we supposed to answer for this
yeah,
one?
hang on a sec. Looks like I have an issue here. Well, I'll give you guys a lightning round. So if I said common stock, what would that be?
Stockholders' equity,
Right. If I said a truck, what would that be?
like a car?
Yeah,
Would it be property, plant, and equipment?
yes. How about what if I said a patent, what would that be?
Would it be an intangible
Yes,
asset?
yes, I would. If I said accrued revenue, what would that be?
I'm not quite sure.
Do you remember what, does anyone remember what accrued revenue is? Where people's they go? Hang on a second. Well, accrued revenue is an asset. That's when you've earned revenue, but you haven't billed or received it yet. So you do a journal entry debit accrued revenue. Let's see, what would unearned revenue be? That can be for anyone.
Is that a long-term liability?
It's a liability, but it's not usually long-term.
Is
It's
it a
usually current. It's
liability?
like when I receive money without performing the service. You know, so I debit cash credit unearned revenue. That would typically be a short-term liability. Where would dividends go? Would they?
Is it not on the balance sheet?
Yeah, I guess it's not on the balance sheet, but that'd be the best answer based on what's here, right? All right, let's see. We'll go to chapter 3. We'll go to Kate. What do you think on?
For 81, I said C, increases assets and liabilities.
Yes, and you're correct, because what's your journal entry?
So you debit cash and then you credit unearned service revenue?
Yep, okay, yep, that's good.
Or
Yep.
would you do like, okay, yeah, that's correct. I'll take it.
I give it a yes. You got it right.
Okay. And then for 99, I said the dividends account.
Right, because dividends is a debit, right? Let's see. Okay, now. Rachel, what do you think on 105?
For 105, I had D.
Assets are debits, liabilities are credits, Common stock is credit, revenues credit, and expenses are debit. You're correct. How about 114?
114, I had A.
Yes, because that is correct. And that's because what's the natural balance of a dividend?
It's a debit.
Right, and debits increase debits. Let's see. Emma, I won't make you do all these, but what would the journal entry be for 1 here?
I hadn't done this one, but is it? You would debit the interest expense and credit the interest payable.
Well, that's. Suppose it was. I guess the wording could be better, but suppose it was the savings bond that I held. Like I bought a savings bond. Savings bonds are typically, issued by the government, right? So if I bought a savings bond, am I paying interest or would I be receiving interest?
You'd be receiving it.
Right, and so you want to try on that basis, what do you think the entry is?
Do you debit the interest or do you debit cash?
Well, they haven't sent you.
You
the
haven't
cash.
gotten it yet?
Yeah,
Then is it interest receivable?
yes, it is. What's my credit?
Service revenue?
Well,
Or-
interest income,
Okay,
which is okay. That's why we're doing these practice sessions, right? That's why you're here. If you knew it all, you'd be teaching or you wouldn't be on the call. Yeah,
yeah.
right. Let's try to do number 2 though, Emma.
All right, paid but not recorded. Is this one you debit the interest expense and credit the interest, or no, because you're not paying it yet?
This is number 2.
Yeah.
What's it say we're dealing with?
The property taxes
Right.
incurred.
Yeah.
I'm
So it
not
doesn't have
sure.
anything to do with interest, right?
Oh, okay.
But you were on the right idea with your debits and credits. So given that it's property taxes, what do you think the entry is?
Is it the tax expense?
Yeah, property tax expense.
And
Property
property
tax
tax,
expense is the debit. Yeah.
and then is the credit the property tax expense payable?
Yes, very good. Okay, good job. Let's see. Rosaline, number 3. So we started out with unearned service revenue. I'll do the first part. They collected it in advance, so I debited cash and credited unearned service rev. Debit cash 4,000, credit unearned service revenue 4,000. That's the initial entry. But by the end of the year, 700 was still unearned, so I need the entry to adjust it down to $700.
So would it be unearned service revenue and then debit that and then credit service revenue?
Yes, for how much?
Would you subtract 4,000 minus 700?
Yes.
Okay, so then that would be 3,300. I'm doing the math in my head.
Yeah.
3,300, right?
You got it right. So debit the unearned service revenue, which reduces it to 700, and credit service revenue for 3,300. Everyone understand that? That's back on chapter 4. All right, we'll stay with you, Rosaline, number 4. So going into the year end, we had a debit balance and prepaid insurance of 750, but by year end, 60% was still unexpired. So just
So
walk through how you're
this
thinking
one-
about this. Yeah.
This one I did not do.
Well, if 60% is still unexpired, what would the balance need to be?
I'm not sure.
Well, how you know how to calculate it? No. So if you started with 750 and 60% is still unexpired, what I would do is 750 times 60%.
Times 60%, which is 150.
Yeah, which is 450. And so that's what the balance needs to be. So the balance was 750, and we know it needs to be 350. Let's see here. So prepaid insurance, 750. We did it by times 60%. So that's then it has to be 450, okay? So how do I reduce prepaid insurance from 750 to 450?
So then you're asking me like, what would be the entry for that?
Yeah, yeah.
So would it be insurance expense?
Yeah. How much?
350.
Well, I'll help you. It's 300. The difference between 750.
I mean 300, yeah.
Yep. And then credit.
Would it just be prepaid insurance?
Yes, it would. Yep. Okay, let's see. Ethan, how about number 5?
For number 5, I had salaries and wages expense 650 as the debit, and then you credit salaries and wages payable for 650.
I agree with that. Any questions on those? Let's keep going. I can't, why am I not moving that? Hold on a second. Ugh. Hold on a second here. I'm gonna go to the other computer now, which seems to be holding. All right, so for 227, we'll just talk this through. I guess we'll stay with Ethan. So in what order would you do these, Ethan?
I would start with the gross sales,
Yeah,
and then I would minus the cost of goods sold,
okay.
which would give me the gross profit.
Mm-hmm.
After that, I would subtract the operating expenses,
Uh-huh,
and that would give me my income from operations.
okay.
And then I'd minus interest revenue.
Well, you'd add interest revenue.
I'd add interest revenue.
Yeah.
And then I would minus my interest expenses.
Yeah,
That would give me my I think net income.
I guess for what here it would, I would probably net those things. I'm gonna correct something though. So I would add interest revenue minus interest expense. That would give me total non-operating income of $1,000. But you've got, what are you gonna do with the sales returns and allowances above?
Oh, I also have to subtract that from, does that come out of my gross sales?
Yeah, you get to net sales. So I'll show. So this is what it would look like. All right. And what's the profit? How do you calculate the profit margin?
Is profit margin is it net sales over gross sales?
No. It's net income divided by net sales. Okay. That's the profit margin. And what I will say is there's still a fair number of questions that on assignments and in quizzes and exams that people don't answer. Like, so if there's 2 questions, if there's 2 parts to a question, there's, it's not uncommon for people not to answer both parts. Like here, number 2 is compute the profit margin. Now, profit margin is net income divided by net sales. What's gross profit margin, Ethan?
If I'm being honest, I did not do that one.
Okay, well, they didn't ask that, but that's gross profit divided by net sales. All right, let's see. And I guess that gets us back to Kate. So Kate on 46.
I said that physical possession determines whether or not they should be included in the physical count.
I don't think that's the answer. Does anyone else want to take a stab at that?
Is it legal title?
Right, it's title, right? It's when title passes. If I have title, then I include in the then I include in the physical count. Because something could be on, well, it could be, I could have something on consignment that's not mine. You know what I mean? It's someone else's inventory that I'm holding. We talked about that. Okay, let's stay on 82.
So I started by taking the beginning inventory, which was $800.
Yep.
And then I added purchases in, which is the 140 and the 20 times their individual prices, and that's 3,380.
Yeah.
And then that gives you the cost of goods available for sale, which was 4,180.
Yeah.
And then I subtracted ending inventory, which I said was 1,010, and I got that by, I think I sold, or I did 1 second using my phone. So I did.
You're right, by the way, but just how'd you do it?
Well,
Yeah.
so I kind of did it backwards. Like they said that they had 50 units on hand. So I went to the top because it was LIFO, and I did 40 times
Yep.
20.
Yeah.
And then I did 10 from the 140 units.
Yes.
And then I got that 1,010. And then if you keep going, or if you do COGS from the bottom because it was LIFO, then you end out with 3,170.
All right. So the key here is ending inventory. So yes, you did it right. So let me try to. I don't have the answer here. Is not here. So the key was developing ending inventory, and it's LIFO. That means last in first out. So it means the oldest stuff is still here. So that's 40 units at 20 is 800, and 10 units at 21, that's 210. So that my ending inventory is 1010. If I reduce that from the 4180 minus the ending inventory, beginning plus purchases is cost of goods available for sale minus ending inventory of 1010. That gives me a 3170. Okay. Everyone get that? Anyone don't get it? All right, Rosaline. Hang on, let me Rosaline, excuse me. Why isn't it doing this? There we go.
So I actually wasn't able to finish this because I just got to like chapter 4 when I was doing this.
Yeah,
before
okay.
I had to.
Well, let's
okay.
work it through together though. So that's fine.
Okay.
So what would you? So this is life. Oh, we just did LIFO. So we'll skip that one because we just did an example on LIFO. So I had 2 LIFOs in there.
Okay.
Let's do 194 with FIFO though. All right. Not that you had to do this one. So I like, you do the beginning inventory plus purchases. That gives you cost of goods available for sale. Then you generally have to figure out ending inventory. So if we do purchases, I'll extend it over here. So purchases. So this is gonna be 300. It's a little bigger, but we'll try to do it here. The font's bigger, so it may not line up. That's 300. And then we'll do the second one, 450 times 350, it's 1350, 1575, is that right? Let's see.
450 times 3.50.
Yeah, 1575. Yeah, I did it in my head. I got it right. And then the third, they're not gonna line up. And then 300 plus 370 is 1110. Is that right?
Yeah.
And so those all add up to 2675, 2975. Then we got to figure, so that's cost of goods available for sale, COG available for sale. Does anyone disagree with my math? I'm just doing it fast in my head. And then saying we have 150 units on hand. So how do we figure out the, and it's FIFO. So how do we figure out ending inventory value, Rosaline, with the 150 units on hand?
Sorry, I'm like, so I did the math and I got 2985. So
Yeah, you're right. I made a mistake by 10. All right.
yeah, so what was the question again? Sorry.
So how do I calculate? The problem gives us that we have 150 units on hand,
So do we,
and it's on FIFO. Yeah. So how do I calculate ending inventory? Where do I choose them from? If it's first in, first out, which ones are left?
is it, so would it be, so for like from September 18?
Yes, it would be. Yes.
Would it be, I'm sorry, I'm like,
So you need 150, but but you're right. You take them if it's first in, first out. Then you take the ending inventories from the most recent purchases, which was September 18th.
would
It's
it
150
be
units
100?
at 370 a piece.
So 150 times 3.70,
Yeah. How much is that?
555.
No, it can't be. 150 units times 370.
370
Yeah.
times 370, I got 555.
Oh, 555. Okay, yeah, right.
Yeah.
That's right. That sounds right. Anyways, times 3.70. So 70. Five is 555. All right, so that's ending inventory. So then what is cost of goods sold? What's the formula for calculating cost of goods sold?
So it'd be beginning inventory plus purchases.
Yeah.
Minus cost of goods sold
No.
available.
Minus
Minus
beginning
ending
inventory, we
inventory.
have the 300 plus the purchases. So there's the 2985 cost of goods available for sale. Then what do you do after cost of goods available for sale?
Minus ending inventory.
Right, man, saying ending inventory. I put a dot in there, but it's actually $555. So that's going to make it. It should be like 2430 if we've done all the math right. Let's see.
Yeah, 2430.
Is that one of the answers?
Yeah.
Okay. Yeah, so and there's the solution. I'll leave it up there for everyone to take a look at it. And I'll send out this document that has it doesn't have all the solutions, but it has some a good chunk of them. All right, let's see here. Rachel, 210.
So, for 210, is that, okay, so I would set up the books and the bank, like categories.
Right, and they're just asking us to do the books here, I think. But that's how you would do
Oh.
it if you're gonna do a whole reconciliation, yes, but they didn't give us the bank balance, so. So
Okay,
the books is 8,800. Okay. Then
Yeah.
which of these are just the books? Yeah,
I would subtract the NSF from it.
yes. And why, you're correct, and why would you do that?
Because it's not recorded on the books. It's happened to the bank knows about it, but the books didn't.
Well, that's, I guess, that's sort of true. I'll just supplement that answer. So an NSF check is, you got a check from a customer, you recorded, you debited cash and credited accounts receivable, right, for 130 in this case. You sent it to the bank. Well, when the bank tried to clear it, it didn't, the person who sent you the check didn't have enough money, right? There were not sufficient funds, the NSF. So the bank never gave you credit for that in the cash, right? So, and they send it back to you and you say, oh, we never actually even, they sent us a bad check. So I recorded as cash, but so it was in my book balance, but I got to take it out because it didn't turn out to be cash. So that's why I deducted. So what's the entry for that? What's the journal entry for that?
Debit accounts receivable for 130 and credit cash for 130.
Yes. And that's because we got to reinstate the accounts payable because they didn't actually pay us. They just sent us a check that was worthless. Okay, what's the next item we would do? You skipped over outstanding checks. Do we not put that on this reconciliation, Rachel?
No, that goes on the banks. That would be a deduction from the bank.
That's correct. And it's already, it's already reflected in our book balance because we cut the checks and mailed them, right? So we don't need to adjust anymore. How about deposits mailed the afternoon of June 30th? Presumably-
No,
Yeah,
that would be on the banks too, because that's deposits in transit.
that's right. Yeah. And again, it's already reflected in our books at that point in time. When we got the deposits, we record debit, cash, credit, accounts receivable, and we're sending it to the bank. The bank doesn't have it recorded yet, so we're all set. We add that to the bank balance. Check printing charges.
That would be a deduction of 30.
Yeah. So we'll just call it check expense. And what's our entry for that?
Debit check expense for 30 and then credit cash for 30.
Yep. And that's a credit. All right, and the last one.
I think that would be, you would add it for 40.
I would add it too, yes. So it's interest income that the bank gave you credit for, you don't know about till you get your bank statement, right? So and then do we need an entry for that?
Yeah, would it be you debit cash for 40 and you credit interest revenue for 40?
Yeah, interest revenue or interest income, which is non-operating, right? All right, so
Yeah.
that is correct. So as a reminder, anything we adjust the bank balance for, we don't make entries for. Anything we adjust the book balance for, we definitely make entries for. Okay. Let me erase that.
I have a quick question.
Yep.
On one of the other problems that are similar to this, for the book balance, we had to add notes receivable to the book balance. Can you explain like what that is and why?
Note receivable, that might be where you collected a payment. Someone paid you electronically. You had lent some money to somebody, for example, okay? So when you do that and it was a note, you would have credited cash, debit, and note receivable. And probably the other example we saw in the along the way was that they electronically repaid you in the bank, okay? So the bank, let's say they repaid $1,000. So you have to add that to you have to record an entry on the books. So you'd add that to your book balance of 1,000, and the entry would be debit, cash, credit, notes receivable. So I'll do that over here. Slow that down. So if we lend money to someone, and we make them sign a note, which is a little more formal than like an accounts receivable, right? So we would debit notes receivable 100. Let's say it's for 100 to keep it simple, and credit cash. That's the initial lending. And let's just say after that, our book balance is 0. Okay. And we'll isolate. We'll take out all the other noise, all the other transactions. So at that point, our book balance is 0. And then they pay you, and then they send it to the when you get your bank statement or the whatever, when you look on your bank statement, you see that $100 came in. Whoever owed you the $100, they paid you electronically. Okay. So now your bank balance is 100. And when you see that, you say, oh, someone repaid me my note, and I don't have that recorded yet. So I have to add that to my book. So it's like repayment of note receivable. That happened to go, that went directly to the bank. So I adjust my book balance, and now it's 100 and 100. The entry I have to make is debit cash 100 and credit notes receivable of 100. We might have, I think we did something like that along the way. That sound familiar? Was that Kate?
Yeah, and that helps. Thank you.
Yeah. Now, I don't think I'd make it more. I'll just leave it that because I'm not going to make it more complicated for the final. But it could be that they paid you the principal, which is the 100 plus interest. So they could have sent you 107. You know what I mean? Potentially. So you say, well, they paid me 107. They only owe me 100. The rest must be interest income. All right. So that's just it. But I won't get anything that complicated. Who's chatting with me here? Let's see. Oh, okay. I see that, Rachel. Very good. See here. Who's left here? Let's see. Let's do Ethan.
All right, for 149,
Yeah.
I got D.
Reduce cash by 336. That looks correct. So how'd you get that?
Showing us some of the following in March bank account. I actually don't have my work with me. I just have what I circled like on the notability doc.
Okay. Well, let's go through it. Would that include, would you reduce the bank balance for outstanding checks? I mean, would you reduce the book balance for outstanding checks?
Are you asking me?
Yeah. Yeah,
For
because I already
outstanding
know
checks, would I adjust the book balance or the bank balance?
the book balance. Would you reduce the book balance? Because they're asking how much did the Schwinn's balance go up or down? Yeah.
I don't think you would reduce it. No.
No, right. That reduces the bank balance. How about would you modify your book balance for deposits in transit?
Yes, you would. You'd take it away.
No, the book balance? No. Those deposits and transfer are things that you know about. The company's already recorded it, just haven't made its way to the bank yet. So I would increase the bank balance for that. The NSF check, what would I do with that?
Would you credit the book balance?
Yeah,
NSF check?
I'd credit or reduce the book balance, yes.
All right.
Okay. And how about bank service charges?
Bank service charges you would have to put on the books.
Yeah, so I'd reduce,
doesn't show
I'd
up.
credit that too. So it's those two items, the 256 and the 80, that become the reduction of 336. Okay. That they make up the 336 in the incidence D. Ethan, how about 61?
Receivables are, I had B for this one, claims that are expected to be
Yeah,
collected in cash.
I think B is the right answer.
All right.
Because they're generally considered current assets, but they're not always considered current assets. And why wouldn't they? What would cause them not to be considered a current asset, Ethan?
Because you can't count on cash that like people have to send you.
Well, what's the definition of a current asset?
Something that could be liquefied like within the year.
Yeah, within a year. So you could have a receivable that's over a year, right? So, and then 96, Ethan. Then we'll let you go for a little bit.
96, I got C.
See, it is an operating
on
expense.
Yeah.
Yep. Let's see here. All right. Did anyone do this one? Well, we'll give Ethan a break, but did either Emma, Rosaline, or Kate do this one?
No, I didn't
I-
get to it yet.
I tried this one.
So how'd you go about it, Kate?
Well, I started with multiplying the accounts by their estimated percentage uncollectible.
Yeah.
So when you multiply across, I got a total of 6,320.
Right. That's that part of it. You're right. Yep. So you did the 170,000 times 1%, 1,700, and so forth, right?
Yeah, exactly.
So that's the required reserve of 6,320. Okay.
And then for A, for prepare the adjusting entry. Oh, well, so they said that there's a $300 credit balance.
Right.
So I did 6,320 plus 300 credit balance, and I did a debit bad debt expense 6,620, and then credit allowance for doubtful accounts 6,620.
So the entries are right, then the dollar amount's not right. So what's the natural balance of the accounts allowance for doubtful accounts? Debit or credit?
A credit.
So it already had a $300 credit in it, right?
Oh, was I supposed to subtract it from the?
Right, because then you only had to increase it by 6,020. They had to be 6,320. Okay.
Yeah, that's okay. That's right. So then it's 6,020.
Yeah.
Okay. So then I flipped it. So I think for B, what I do what I originally did, where I added it because it's a debit.
Right. So if it was a debit
Yeah.
balance on B, a $300, then it would be 6,620, I think. Yes.
Okay. Okay.
Yeah.
Yeah.
That's the solution on that one. Let's see. Did anyone do this problem? All right, we'll walk through. I'll put the solution up and we can walk through it. So I purchased the equipment for 5,500 plus sales tax and shipping costs at 250. So I think those are all capitalizable costs, right? It's all what I paid to get the asset ready for its intended use, right? So that's when you add that together, it's 5,500 plus 305 plus 250. So I debit the equipment for the sum of those three items, 6,055, and credit cash 6,055. On November 3, it says I incur ordinary repairs. Well, that's not ordinary repair. Isn't something that's getting the asset ready for its initial and intended use. That's just ongoing, that's like 5 months later after I acquired it. You know, maybe if it's on July 3rd, then you maybe say, well, that maybe I was getting it ready for its intended use, but clearly this thing's already in use. And so that's just maintenance and repairs expense debit and credit cash. All right. On December 31, we have to record depreciation. So how do we calculate depreciation? Emma, we'll go with you.
I'm not sure.
So it was on so we had three things. Forget this particular example. So you have what are the three components of calculating depreciation? You got the original cost. I'll start you with that one. What are the other two items? There's some things here that are listed. Yeah.
Is it the salvage value?
Yes. And what do you do with the salvage value? So you got the original cost.
Do you divide it by the salvage value?
No, not the
You
salvage.
subtract some.
Yes,
Oh.
yes. So we say the cost is the 6055, which is the sum of those three items.
Mhm.
Less salvage value, SV, which is what? 455?
Yeah.
And that gives us 2600. So that gives us the depreciable value. I know it's not lined up here, but that's 5600. Okay. Now what do we do to get an annual depreciation?
You divide it by. Is it 3? Oh no, it's 4 because it's the 4-year life.
Right. We divide it by the useful life, right? And here
Mhm.
they tell us what the useful life is. In this case, it's 4 years. Useful 4. And so that gives us 140, 145, 14,500. Is that right? 140.
Yeah. Or 1,400.
1,400. Okay. All right. So that's how we calculate the annual depreciation. But it says now at December 31, we have to record the depreciation. So what entry do we record at December 31, Emma? Now we bought this on July 1. The equipment.
So it's the number of like months that's passed. from
Yeah.
them? Is that 6 months?
Yes. Yeah.
So do you multiply or do you divide the per year by 6?
Well, 6 months is what portion of a year?
A half.
Right. So I think we take this per half.
Okay.
So 1,400 is a whole year. And 6 months is a half a year. So we take 700. So what would my entry be?
Do you debit the? I'm not sure.
When I record depreciation, just in general, when I record depreciation, what's my entry? Remember
Is it depreciation expense?
Yeah.
And
What's
then
and my credit is
it cash?
it's not cash, but I'll help you out here. Let's see. It's accumulated depreciation,
Okay.
which is
Mhm.
what kind of account is that, Emma?
Is it a contra asset?
That's right. Yes. All right. Now, and then 2017, Emma. A year later, they say record. So, well, I'll do the depreciation. Let's see. So I'll do a T account with depreciation. All right, so that was we did 700. And then we did over here. Dep. I'm just doing the journal entry inside the T account, okay? Debit depreciation expense, credit accumulated depreciation. That's what we did at the end of 2016. Now for 2017, it says record the depreciation for the whole entire year. So what's our entry, Emma?
For the whole year,
Yeah,
would you debit the depreciation expense?
yeah. How much?
Is it the 1,400,
Yes. And then what? What's my credit?
the accumulated depreciation?
Yep, for the same amount. Yep.
Yeah.
Okay. And that gives us that answer. Okay. And then we don't show getting rid of it here. And I'm not gonna test us on major upgrades, so I'm not even gonna slow us down for that one. All right, that's good. So then we didn't do a disposal here, but I have a whole video on how to dispose it, which needs some more views. Let's see. So that was Emma. Kate. No, Rosaline. I can't remember what order I am, so I apologize if I go back. Rosaline, which is 79? What do you think?
Is it B?
No, that's a key thing, right? We just did over here. See over here, we did these are the three things you needed to know: the cost, salvage value, and useful life, right? That's over here. That's what we need to do.
Oh, C.
Yeah, see, that's right. We don't conclude on, we don't need that. That's true. 81, what do you think?
Is it B?
It is B. That's why we do it over time, over its useful life, okay? All right, let's see. So then we're to Kate, 10, the first one on 10.
I said a discount B,
Yes, it is a discount, yes.
and then for 157, I said C, greater than face value.
If a market rate of interest is 10. Yes. Which would be a premium, right? That's the two things I think you need to know. That if it's the difference between, and the other thing you need to know, so if the market rate of a bond, if the market rate's higher than the stated rate for a bond, it sells at a discount. If the market rate is less than the stated interest rate in a bond, then it sells at a premium, which means it sells more than face value. We always pay, the other two things are we always pay the stated rate. So like on 157, we'd always pay 10,000 times 12%, right? But we would always recognize an interest expense via, we'd always recognize the market interest rate. We always pay the stated interest rate. So those are the four things you need. Those are the things you need to know. If something's sold at a premium or discount, we just covered that. We always pay the stated rate of the bond, the face value times, like in 157, the 12%. So that would be $1,200 a year. But we always recognize interest expense in the income statement. Hang on, hang on a second. Hang on. Hey. Oh, that was about sorry about that. Yeah. Okay. But yeah, sorry. Bye. Yeah. Sorry about that. All right, so then we're on to chapter 11. Hang on, which is our last chapter. Let's see how much is left. All right. So that who was I just with? Was that just Rosalind? Who was I just talking? Was that Kate or Rosalind I was talking to?
You talked to me and then Rosaline.
Okay. Ethan. 78.
Yes. 78. If is that chapter 11? Yes.
Yes. Yeah.
Cash would be let me see.
Let's see. Yes.
You would
Yeah.
debit
Yes, it would.
cash for
How'd you get it?
210,000. You debit cash 210,000. You
Yeah,
credit common stock for 30,000,
yeah,
and your APIC would be 180,000.
that's right. How about 102?
I got 102 corporation purchases. C,
C. Yes, that's the 20,000 shares times what you paid for it. Yeah. 35. You ignored the par value. That's correct.
do you want
Emma,
to keep going?
103.
I didn't do this one yet.
Well, let's work it through together. So I buy 30,000 shares of my own stock. What do we call that for starters? When I buy my own stock back?
Is that treasury?
Yes, it is. Okay. And the par value of stock is $10, but I pay $25 per share to buy it. What's my effect on stockholders' equity?
Is it C? It increases.
Well, is treasury stock that is it a credit or debit within stockholder? It's a reduction of stockholders' equity, right? It's a contra account within stockholders' equity. Because remember, I credit cash and I debit treasury stock. It's a debit, and the normal balance of stockholders' equity is a credit. So it's going to be reduction. So it's going to be. You had the right number, 750.
Oh, so it's B. It
It's B,
decreases.
yes. And then now we know it's a deduction. Which so what's the answer on 104?
If it's a deduction, is it gonna be? Is it D?
It is D. It's the last thing in equity. Okay.
Okay.
All right. Let's see. Is this the last problem? Not two problems. All right. Let's see. I'm just going to walk these through quick because I have to finish up. So on March 1, we issued. This might have been a problem on your. Well, maybe almost. I issued 90,000 shares of common stock for $675. So I get cash is $675. I record the common stock at par value, which is 90,000 times $1 a share, and the difference is APIC for $585. I pay $2 cash dividends per share. When it's $2 cash dividends per share, that's always on common stock. Okay. Now there's no preferred stock in this example, but some people made a mistake on the second exam. So $2 per share. At this point in time, there's by the time the dividends declared, there's 165,000 shares outstanding, the 75 plus the 90 that were issued. So that's going to be 330,000. The 165 that are outstanding at that time times 2. Okay. Debited cash dividends, credit dividends payable, and then they pay it on June 30th. You know, you reverse the liability and you credit cash. Then we buy treasury stock, 5,000 shares at $18 a share. We'll debit treasury stock for 90,000. That's the 5,000 times 18, and credit cash for 90,000. Okay, and then we declare cash dividends outstanding at $250 a share. But how many shares are outstanding now? We don't pay dividends on shares we've repurchased. So it's the 75 initial plus the 90 that we issued, less the 5 that we repurchased, so that you have 160,000 shares right here times the 250, and that's cash dividends and dividends payable. Any questions on that? And I'll send this out so you'll be able to see this. And then I'll just let you look at this. But if you and I'm going to send this test out. But that's what your equity statement should look like. Any other questions? Any specific questions that we didn't address in this session that I can help you guys out with?
Is our test on paper?
It's going to be like it has been. Mostly, it's going to be in Canvas, and you probably get to do a couple problems on paper.
Okay.
Figure about 70 points are going to be on chapter 7, 8, and 9 as you allocate your studying. And this practice test is a pretty good guide for the other chapters that you'll need to know. So focus your efforts, first on 7, 8, and 9. And the reason for that is because I haven't tested you on those yet, right? Let's see. Hang on a second. All right. So my neighbor just gave me this shirt. I'm not sure if you can read it. I get close. I have. I think it's sort of whiskey business, anyways. That was sort of funny. Wednesday, Guzman 250 Wednesday, 1:30 to 3:30. Any last questions?
Can you set time one more time?
1:30 to 3:30 on Wednesday.
All right, thank you.
Anyone go to the game yesterday?
I went to the hockey game.
Or you went to the hockey game? They didn't win that, right?
No.
Yeah. Well, the basketball game you should have gone to. They won that one, but a lot of holiday outfits at the basketball game, anyways. So, all right. Well, this is well, thank you for showing up. And this is my last. Well, it's not even a class. At least there was some interaction. Now it's just the exam. So I get a little sad when I end my classes with my students. But anywho, we will see you on Wednesday. Okay.
Thank
Thank you,
you.
Professor.
Thank
Bye,
Appreciate it.
very
thank
much.
you.
Thanks, everybody. Take care. Go Pats.